Good day and welcome to Metron's podcast series, Round the Water Table, your source for utility and real estate water resource management knowledge. My name is Ted Worth. I'm Regional Director for Utility Sales here at Metron, serving the water utilities industry with best-in-class metering solutions. Today we are joined by my friend Charlie Zitnik of D.A. Davidson Companies to talk with us about financing options for utilities looking to install or upgrade their water metering equipment. Welcome, Charlie.
Thank you. Good to be here.
With that, let's get started. Could you give us a little background on D.A. Davidson before we get started?
Sure. Just as background, D.A. Davidson is a brokerage firm and money management firm and financial advisory firm. The office I work out of is our Denver regional hub. We're about 1,600 employees strong in operating in all 50 states, and we're in this subset of subsets that we do financing for utility improvements, energy efficiency, and redundancy.
How long have you been providing financing for utilities?
I think I'm sorry to say I'm in my 44th year licensed in the industry. I got into this industry, fortunately, straight out of school, and I've been in it ever since.
Have the terms and conditions and the covenants changed since you've been got started 44 years ago?
There certainly has been an evolution in the financing of utility improvements in that time. And probably the biggest part of the evolution is not the need by the utilities, but the willingness by the lenders to adopt the finance structures that the utilities need to make a system operable. And in that, I mean, back in the day when we started, doing a financing that was subject to annual appropriation was kind of a 3 to 5 year time frame that the lenders wanted very fast payback, and they also wanted a huge amount of equity, meaning cash from the borrower in the transaction. Fast forward 40 years later, we now do financing easily 10 to 15 years on meters and up to 35 years on larger infrastructure. The covenants and conditions are lower by the lenders, meaning not as stringent on the borrowers. Lenders, they are slow to adopt, but lenders will adopt to the needs of the borrowers eventually. So it's a ever-changing, fluid approach to financing, as opposed to, I would say it's a motion picture, not a snapshot.
Okay. Is it funding as a loan or as lease purchase?
In most states, you don't have an ability to actually get a loan from a bank unless you have voted bonding authority, meaning you've gone to the voters and they have given you authorization to borrow. Probably 70 to 80% of my work now, and has been for the last 20 plus years, has been lease financing, not loan financing.
Okay. I've had several utility clients ask us if they do funding, they put the meters in the ground, the meters return, a higher percentage than what they thought. They're ending up getting 25, 30% additional revenue after putting new meters in the ground, and they'd like to pay the system off earlier. Is that something that's feasible, and are there any penalties associated with that?
Yeah, great question. The answer is, and we recommend this to any utility, is because the yield curve right now is so flat between a 5-year financing and a 15-year financing, don't tax your system with doing it very short term and having a scheduled high payment. Since there are no penalties for early payment, simply do a 15-year, for example, but pay it off in 5. In other words, pay extra every year. Think of it like you would your home mortgage. Pay a little extra every year, and lo and behold, your mortgage term shortens. And that's what we recommend with utility borrowers also is don't squeeze yourself by going with a short-term financing that effectively puts a gun to your head on payment. Stretch out the required payment, but pay extra when you can, and get that financing paid off early.
One of the things that we try to accomplish when we come in and start talking with utilities that want to do AMI projects, we would like for them to do the project all at once. And there's several benefits to that. One is that the day after the project's done, we know exactly what their water loss is. They've got the most accurate water meters they're ever going to have the day after the project's completed. So they're able to do calculations on that. And the other is the ability to capture revenue up front. So we get the question, can you make payments later? Do you have any programs in place where they can do the infrastructure all at once, get all the meters put in the ground, but not have to worry about making a payment for some period of time down the road?
Yeah, thank you. This is a key consideration when you're doing a project. And there are two components of this. One is mobilization costs, and that is if you only mobilize the team once, then you've avoided multiple mobilization costs, and that savings in mobilization costs can be used to improve the system. That's one component, but probably more importantly or equally important is you want the system in and producing savings before a payment is due. So we typically will structure these lease financings so there isn't a first payment due for a year or 18 months. And then they start making payments, be it monthly or quarterly or semi-annually. But there can be a long grace period in there where they're recognizing and realizing the savings, and then the payments start.
Are they able to bundle the installation costs with a project like this? Yes.
This is actually it's a bit of a throwback to when meter improvements were coming into existence and the systems started replacing their meter systems. Lenders, back to the lenders, they didn't like the idea of funding just meters. Okay, that wasn't something they had been doing in the past, and they saw no reason to be doing it in the future. So they would say, yes, you can do your meter project, but it needs to be part of a larger project. And so, yes, we would bundle a larger project. It might be water storage, it might be water treatment, it might be pumps and well houses, anything, but they wanted something in addition to the meters. And going back on the 44 years of being licensed in the business, that's been an evolving structure for lenders to either bundle or unbundle projects.
Okay. Wonderful. So what is the biggest challenge you have when doing a meter replacement program?
Do you want just one? There. I think the excuse me. What I witness is getting systems to believe the math. And the math is that they are losing anywhere between 10 and 30% and sometimes up to 50% of water loss that they are producing the water for and not being paid for. And that you're simply looking at a way of transferring that from a cost to income. And you're doing that by you're now charging for the water you used to lose, and that will take care of the cost of the improvements to the system. So it's convincing the non-believers that this is not, to quote a former president, voodoo economics. This is
Right.
This is simply a way of reallocating monies that should be coming in anyway.
Okay. Is there a empirical method during the sales process to get people on board, or are you doing this after the project's been initiated?
Oh no, I think this is clearly a part of the process, not after the process.
That's what I would have thought. So,
I think it's integral to there being leadership understanding of how this works, and not just signing off because it sounds good.
So I would assume that you've got a big track history in the 44 years. So do you keep track of the successes of jobs that you finance. So you have evidence of what we're talking about here.
We do. We just as a policy, and this isn't for all Davidson bankers and all projects that we do, but for our group that does this meter project financing, every client we have ever financed, we have gone out to and been on site before we do their financing. Okay. We want to understand the project, and we want to meet the people, and we want the people to meet us. And what I can tell you is from when we started doing meter project financing on a standalone basis, okay, not bundled as part of a larger project, the defining factor of a successful project has been the ongoing consultation with the client, and the client understanding they're not necessarily building a relationship with the financier, but they are building a relationship with the meter provider. And that relationship is going to continue long after the financing. And I will give a shout out. We have a number of systems that we have done financing for that have failed, that didn't operate to the efficiency that they expected. And we have gone in, there's still debt outstanding. Let me back up. So they'll do a financing. Let's say it's a 15-year financing on a meter system. After 10 years, their maintenance and labor costs are exceeding the savings they're getting from the automated system. So they want to replace it with a new automated system, but they still have debt on the old system. And that's a frequent occurrence where it might be just because it's at the end of the useful life. It might be because it wasn't properly maintained, or it might just be a bad system.
So you see some premature system end of life?
We do. And then we will go in and we will do a restructuring of the debt to allow them to take care of the old system expense and have financing for the new system.
Okay.
I will tell you, and I need to tell you, we have financed, I am certain we've financed every automated meter system that is in use in the United States. I shouldn't say that. We financed many, probably most, and we have never had any kind of a failure whatsoever with a Metron system. Zero.
Thank you for sharing that.
You're welcome.
Our brass will love to hear that.
Well, it's true. And Metron has been the replacement system in instances where they've had a system fail earlier than expected. Even I expect a Metron system, there is a end of useful life.
Yep.
Haven't found it yet.
And you've helped us in this particular case with a couple of folks out in Missouri where they were in a difficult situation, and I know that you came in and saved the day for them, and we're able to get a system that works the way they want it to. So appreciate that. Sure. So what has been the most surprising to you as it relates to financing, meter financing?
Most surprising. I would say that for the and I'll use, you brought up Missouri. Let's use Missouri as a standard bearer. There are 1,200 communities in Missouri. There are probably 450 water districts in Missouri. The inflection of automated metering, if it's 25%, I would say I'm guessing high, and it is an immediate. It is the shortest term payback a utility can invest in. And the surprising thing to me is that we only have about, I'm supposing, a 25% market penetration in the states we see automated metering.
Interesting. We run across large utilities, surprisingly large, more than 100,000 water meters, and they're still walking to read their water meters.
It boggles the mind and baffles the imagination.
Bet it does. So, well, we appreciate your kind words.
Well,
so once your decision is made, once a utility decides to go ahead and move forward with the meter replacement AMI project, how long is it going to take you to get the financing lined up and in their hands?
Realistically, 5 weeks. We have done it in as short as 11 days. That was an urgent call at the 11th hour. They hadn't thought about financing and realized they needed some. But most typically, it's about a 5-week process, because what we're doing on behalf of the community or the district is we're going out to community banks, we're going out to regional banks, statewide banks, and national banks, as well as non-bank lenders that have expertise in financing of the metering systems, and we are putting them in competition against each other to come back with the best terms and rates and conditions. And then we are presenting those to the community or the district to make a decision on which way they want to go.
Charlie, the last time you were here, you're doing a presentation for the sales team, and you'd made a reference about John Deere. Do you remember the quote?
Yes, generally, because I believe it.
Okay. Do you remember what the quote was and the reason that you shared it with my team?
I can paraphrase it, but this is what I was trying to get across. We go and see every project and meet the people on a project that we do. And it's not only for us to meet them, it's for them to meet us. So when we go into a community or a district, there are just certain markers. And one of them that we just sort of, for shorthand, John Deere equipment. If they have John Deere equipment for their maintenance crews and their line crews and what have you, and it's in good condition and well-maintained, that's a marker. And if when we go into the maintenance building and the maintenance office and the water plant, if they're spotless and just clean enough to eat off the floors, that's a marker. The John Deere equipment and the clean and orderly facilities, that means it's a gold standard. And when I think about Metron meters, you're the gold standard. You can't make a wrong decision when you're going with the gold standard.
Thank you for saying that.
Sure.
I guess you have some experience with us and some successful projects. That's where you're getting your quote from, and references to?
I think I can add to the quote. If a system has John Deere equipment, a very well-maintained water plant, office, maintenance building, office, and Metron metering is their preferred supplier or only supplier, that means they've done the research, done the homework, and spent the money properly and accordingly.
And they probably buy equipment that's going to last longer than maybe some of their competitors.
Well, I think you can in anything you can buy the cheapest, and oftentimes when a system gets to a procurement officer or a purchasing department, that's what they see. That's the cheapest. But the life cycle cost of that is likely dramatically higher. And you've got to look at life cycle costs. And when you can talk about a Metron meter that has a 10 and 10 on the warranty, you've got a system that's going to last. They wouldn't. I expect your warranty claims are a de minimis amount of the number of meters you have installed throughout the country.
Yep. Because
you make a superior product.
Well, fortunately, since I've been doing this since 1993, so this is going to be my 31st or 32nd year, I think. And when I first got in the industry, low bid oftentimes won, and people got what they paid for. And fortunately, it's evolved, where people write their specs, they go to their bid, and they're putting in things that they want, and they'll put a caveat in that says what's best for the utility. So we're never going to be the low-cost leader in any project that we do, but we have the most advanced analytics and a product that holds its accuracy. And we're very proud of our water scope system, but it's fortunately, people can make decisions on what's best for them. It doesn't necessarily have to be the least expensive option when they get their quotes or their RFPs. So I'm interested in, we get a lot of questions on scope in terms of dollars amounts of what can be financed and so forth. Do you have a max and a min?
Yes, and I'll get to that. There is, at the risk of slitting my own wrist, there are projects where you don't need what we have, or the project doesn't justify bringing us in. And it may be your project is of a size and you are in a state that is well banked as far as community banking, that you're better off just going, there's costs for what we do. You're better off going just direct to your community bank and doing that financing. In answer, that's a little bit of a dodge around your question, but in answer to the question, the minimum, maximum, I have done a project for $17,000, and I have done a pool financing for a variety of borrowers for $122 million.
Oh, wow.
And I think Davidson, I'm certain I've been beaten on the high side and on the low side by other of my counterparts within Davidson. Right. We're there for everybody.
Interesting. We've had projects. I did one in Kansas where they were being fed water from one of our bigger customers, and they asked us to come in and do an AMR cellular system. They had, I think, 17 meters. I'm not kidding. They had 17 water meters, and we put them on their system, got them so that they could do their billing monthly. But that gives you an idea of the extent of what we'll do. And then on the opposite side of that, we've got AMI cellular systems in New York City. So we can do the whole scope, and the system is completely scalable to account for that.
Okay. Well, I think we come from a very similar point of view, very different disciplines, but a similar point of view.
And so you kind of mentioned this, but you said that you did finance a $122 million project. Mm-hmm. It was interim financing for a rural community. Can you expand on that a little?
Yeah. Actually, we've done just under $1 billion in Missouri only. We've done many billions nationally in this program. But when a rural borrower is getting permanent financing through USDA rural development, they have to get their own interim financing and build the project, and then USDA will give them the permanent financing. And as you know, many communities we all work with, they don't have the kind of money to build a project and get reimbursed, so they go out and borrow, and we provide that funding source. And I'm gonna this. I know this is not my forum to do so, but people need to know there is the federal government and all of our frustration with the federal government, and there is USDA, and USDA operates like a business at the rural development level. They don't operate like the federal government. They are a joy, and I mean that, an absolute joy to work with. Business friendly, and they treat transactions and clients like transactions and clients.
And how does that dovetail with what you're providing? I'm not understanding that.
Well, we're providing the financing up until the point the project is built, and then USDA pays us off, and they go with 35-year permanent financing.
Is there a bidding process that takes place ahead of time in order to put the funding in place?
For the financing component, or for the
vendor side of the project?
Well, yeah, the USDA's requirements are that the project has gone out for bid, bids have been accepted, and then we do the interim financing.
I got it. Okay. So I'm curious. I've heard that there is a difference in how it appears on your books, whether you're doing a loan or the leasing. Is that accurate?
Long answer to a short question. On the bank's books or the lender's books, they need to designate it as a security or as a loan. Okay, and they get a different accounting treatment and reserve requirements depending on how they book it. Okay, from a borrower's point of view, it all goes as long-term debt and current debt.
Okay. So, and you go both directions. You can do lease or okay. And so, do you help them make the decision on which direction to go?
Yeah, it's the state law makes a lot of that decision for them, but most times it is state law dependent. If it is in their interest to do a lease financing, and just to give you a distinction, a lease financing is a pledge of the equipment. Okay, a bond financing is a pledge of revenue. So in one case, in the case of a bond, you have an unconditional pledge that they will pay the debt service.
Okay.
In a lease financing, it's not an unconditional pledge. It is a lease, and if they don't want to renew that lease the second year or the fifth year or the 10th year, they can choose not to. It's a risk the lender takes.
Interesting. Okay.
To our defense, we have on essential purpose infrastructure, which is what meters are, no lender we've ever worked with has ever had to move against collateral. It just doesn't happen.
Okay. So do you have any parting thoughts you'd like to share with our audience today?
I think the parting thought I have is just the fact that the highest, quickest payback for any water utility is to automate their metering system and to get accurate metering. The water losses that we know of and help clients with, 30% is not uncommon. 50% is getting a bit absurd, but we see it. And I would just leave with the thought that you have an ability to do upgrades to your metering system, and financing is available. It doesn't require you to come up with cash. It can be done over 2 or 3 budget years, or it can be done all up front, or it can be done very long term. But in all cases, other than doing it up front, you're paying mobilization costs each time, and you're not getting the accuracy and measurement and verification that you would if you did it in steps over years. So I guess that would be my closing comment is consider automated metering and consider doing it all at once. The payback is in your interest.
So if any of our listeners have projects in mind and they're looking to do some sort of financing, how would they get in touch with you?
We have offices throughout the country. I work out of the Kansas City office. Most often, our working with the community comes through the vendors and the contractors. So selfishly, I would recommend they get in touch with their Metron representative, and the Metron representative will get us initially involved.
Okay, so you wouldn't have any problem going to a board meeting or city council meeting to have discussions on financing if it's needed?
It's what I was doing last night. It's what I'm doing tomorrow night.
Wonderful. Well, thank you, Charlie, and thanks for watching or listening. And we'll catch you next time on Round the Water Table.
Thank you.